thank for coming over here because we have 3 sessions today, this morning, so we're going to be next room here and downstairs. So this room I'm talking about nonprofit management. So nonprofit means our organization, a nonprofit, and all our chapter regardless are nonprofit organization. So what kind of organization are we as a nonprofit? Because nonprofit, there's a many type of form. A nonprofit, we are not what we call public charity. So public charity is real nonprofit because they receive fund from donor, and when they receive fund from donor, the donor has the opportunity to deduct it from their income tax. For us, we don't have that luxury. We don't have that luxury. So our organization is called 501c8. It's a fraternal organization, so it's not a public charity. So this is a distinction between the real and the sub. Because what we do is that when we receive funds from everybody, we don't pay a tax. We don't pay a tax, right? So we have to meet certain requirements. One of them is we must have a fraternal purpose, and then we have to be a large system. A large system is that we have global lodges. So many lodges that we have what, around 20, somewhere around there. I never count. So some active. We have a few that's non-active organization right now, but we still have a few members over there. So even though it is non-operating, but still we have people doing some work. So that's a good thing. Okay. Another one is that we have some sort of program that provide back to the membership. When this organization started more than 100 years ago, we do have program, certain type, what we call the insurance program, benefit for the member. I think when they passed away, we provide them with certain type of remuneration, give them some money. Okay. So we have not completed for all those. I think we still have members still alive from the original. So until we, recently that the new member, we never said we had that type of benefit. But how long we're going to hold that, we don't know. Okay, so we have to look for the future to determine what we're going to be. Okay, so when you are a nonprofit organization, we apply for the Internal Revenue Service and ask them for permission to be non-exempt entity, and that is through application. When they approved it, then we can receive favorable tax treatment from them, and that is substantially what we are having is that our organization don't pay taxes. So we filed what we call information return, not income tax return. But if we do something aside from our organization, majority of the time, then we're in a problem. Then we have to file, report, and pay an excise tax. It's not income tax. They don't call it income tax. Okay, they call it excise tax. So it's just essentially we got to pay money back to the government. So whatever they call it, substance versus form, right? Whatever title doesn't mean anything because the substance is that you got to pay the money.
Example.
So that's important that we do what is allowed under the statute that we can do. So in order to do that, every year we had to do something. What we had to do is to file what we call information return. The information return is various, but the main one we had to do is the 990 series. 990 series is the long form, easy form, and the simple easiest form. Okay. Current law dictated that we must file electronically. We have to go purchase software, do it ourselves, or rely on an accountant or somebody to file our return. But 99% of the time for all our lodges, we are filing the simplest one, what they call it 990N postcard, e-postcard. So that's the simplest one. How do we qualify for that? Was there any or lodges that receive less than $50,000 a year? You can some year.
What do you mean by receiving 50,000?
No. We see money from everywhere, everywhere. Money, talking about just money. I don't care how much you spend. You receive from some grant.
Business.
Huh?
How about our business?
Whose business? Your business?
No, the large business.
What?
Any kind of income is what he's.
What I'm saying is anything, any money, 1 penny. I don't care. I throw you 1 penny, you got to report it. That's about it. I don't care what kind.
Unless
I don't want money. I'm just only talking money.
If I throw it away-
Cash, check, credit card, anything you receive. It doesn't matter what kind. Okay? You have you're a rich person. You have 20 property. I know that. For all kinds. But all those are income. Doesn't matter as long as you receive rent. That is taxable. Okay? I don't care if you go to buy, 20 cents, fill up the kitchen again. Don't care. That's not substantial. Even though you lost money on your investment, it doesn't mean anything. What it means, when you need to meet the threshold to make the report, is 50,000. 1 year you can 60, but on the average, 3 years, it must be less than 50,000. Then you can do what we call a e-postcard. But if you have more than that, I understand Oakland had to report it, what we call it, 990 easy, because they didn't meet, 50,000? I think that is, I didn't check last because I don't have to do that. So, and there's only like 2 or 3 organizations that we have to file the 990. Hi, John.
Give me an example of where you pay the excise tax. The income that you receive, what portion of it do you have to report it so that you can pay the excise tax? Example.
That is what something that they call UBI, they call it. It's not related to our business. Okay, what is the lodger supposed to do? So, if let's say your lodgers want to do bingo game, okay? It's one form of revenue that nonprofit do. The churches do them all the time. You go to churches, in the old day, we do gambling too. Okay, all Chinatown have gambling pit, pai cao.
If you've ever been to the National Lodge headquarters, you see our San Francisco office. That looks like a bank, If you go inside, you see the counter, you see the glass there, you see the cages. That's actually a banking room there. And we got a vault downstairs. I mean a real big vault. You could walk in the vault. And this got thick doors, and I got my finger squashed one time down there. Yeah, and I mean, it's a bank, so.
It's a bank. Huh?
And actually, what I've heard is that they had paikao and gambling down there, before.
Anyway, we don't do that anymore.
I hope not.
Don't do that anymore, okay?
So you,
I wouldn't say nobody, some of the other associations, they still do that in Chinese New Year.
so that's why you disbanded the.
Well, I'm not saying that it is not, but we don't do that on a daily basis. Otherwise, we becoming a casino, right? So that is, even though we are large, we operating a casino, you see, then that is no good. That is, then you have to pay a tax,
So you
right?
pay
Because that is separate, distinct from what our main function is. Our main function is providing benefit to our member, not to other, to our member. You have to be a member of this organization. The benefit is provided to the member, not to outside people.
But how about our income from donated properties, donated, I know about donated money, but how about the properties? Anything over 50,000 you have to report.
Say that again. What do you mean by donate?
Income from properties.
Our income from property? Okay. See, that's what I'm just, at first, we're gonna go back, okay? If you receive more than 50,000, you have to file the long form.
Loan from,
Okay.
yeah.
990, if you exceed a certain threshold, that's the major one. Everybody do that because they're like 15 pages of report you have to file. And the other one is called easy. That's a little bit more than $50,000, but it's not up to another threshold.
But we don't have to pay taxes even on it, even though we have to
No.
file the long form.
No. Like San Francisco is large. We still under 501c8. We file the long form.
501c what?
8.
8.
We are not
4?
C3.
We're not C4?
We're not C4, sorry. Okay, I told you,
So-
beginning, all of us under C8,
Yeah.
okay?
Okay.
So under your example, if you have a bingo operation, you have to report that independently?
No, if you only do it occasionally, it's just like you have a banquet in the new year, what do? You're making some money.
No, what if you do it on a constant basis? Like
Or you
constant-
constant, then
Once a
they
week,
once a
probably
week.
revoke your non-exempt status because you're really operating as a casino rather than as a business providing benefit to the member.
Well, I
And
mean, if the,
there's a certain benefit that you have
if
to
the
provide.
if the proceeds of the bingo games goes into the general account,
Oh yeah, I mean, that's what I'm just saying. All income that's non-related to the purpose and becoming substantial, unrelated to the business. The business is the large system providing benefit, and you receive membership due from them. You operate like an insurance company. It's not you operating as a casino, so it's a two different things.
yeah, but if you're doing a bingo game, let's for example, and all the proceeds goes
Well,
back.
how
into
much
the
money
general
you
account.
receive, that's another thing,
Yeah,
right?
I mean, and those funds are used for the benefit of the members. So,
Well, the membership, let's put it one way, okay? What's your insurance policy call for? You give 50,000, 20,000, but your income from casinos, 20 million. You never will use that for your member. You're creating something that is different, right?
But you're donating,
That doesn't matter. That really doesn't matter in donation because we're not talking about donation, okay? Because you're supposed to be receiving donation instead of giving donation. Your organization is not developed to provide donation to other people. in that case, if you do a donation to other people, then you set up grant and you're becoming a foundation, what we call. When you do a foundation, it's like somebody like Mr. Kwok there, he set up a foundation, providing money
No,
to.
I didn't set up anything, I just.
I'm just doing it as an example.
CACA has a foundation that is a separate corporation in order to allow us to give grants and to help the community by giving it what we call education or charity grants since 1993. So it's called the National CACA Community Involvement Fund. That's what he means. I have to run that one while he's running Tongan Wui.
Yeah, and it's a C3, not a foundation.
And that one is a C3.
Well, let's put it this way. C3 can be a foundation. It distinguishes between how you give the money to that organization. Like John, Mr. Robert Wong has trillions of dollars. He, the individual, donate everything to the organization. Then the IRS said, "Oh, there's only one person donating." Then you're not really from a public interest. If the public does not support this organization,
So it's purely
only that
charity.
person supports.
It's purely
charity.
Then becoming a foundation.
To answer, Bob, you asked if a guy gave a house as a donation to Tongan, do we have to report that as gross income? And the answer is anything that's given that has asset value for that given year has to be counted as the unadjusted gross income of that organization. So the answer actually is yes. It'll be on our income tax that we receive that house.
It's just what you receive as an income, extraordinary type of income. That's all.
How much are we required to donate per year from the income that we receive?
About 1/3 that you spend for certain purposes. About 1/3.
So
when you
Not
receive
15, that's 30%, not 15%.
No.
Oh, wow.
So what you're saying that one person cannot donate to the,
No, I didn't say that. I said one person can donate everything to the organization, but the federal requirements say if I approve this is a nonprofit, 501c3, because that guy wants to have a tax benefit, right? He's not going to give a building for not receiving something back, isn't it?
Very true.
Right?
Yeah,
Right?
Right.
I mean, that's what we try to do, right?
yeah.
So that person, only single person, or 2 or 3 person, they say, as not public giving you money, you're not receiving grant from government, you're not receiving grant from company that try to make your organization become a public benefit welfare organization.
Is there a
So
percentage
that is what
threshold?
happened.
is there a percentage threshold?
What?
Is there a percentage threshold?
No, you can give all your money.
No,
Bill
I'm
Gates
talking
get
about-
all
I'm
his
talking-
money.
I'm talking about
I'll
the
take it.
receiving organization. Let's say he gives,
You talking about the organization
Yes.
that receive money?
yes, if they,
Oh, no.
let's say Robert wants to give you $1 million and he's the only donor, that wouldn't qualify, right? But if the total contribution for that year is $5 million and he only give $1 million,
So?
that would count, right?
No, anything, you have to separate about 3 things, okay? One, the organization receive money. It has to be public charity, okay? In order to receive tax benefit for both, okay? The organization receive money and the person who give money. So there are 2 things, right? I mean, this side give money to this side, right? And this side, in order to say it is tax related. This side is organization that receive money. They don't have to make income tax. Hey, I'm talking tax. I'm not talking report. Okay.
Yeah.
Right now we're only talking about report.
Yeah.
Okay. So they don't. They would be on their report receiving money, but they don't have to give 1 penny. Okay. Okay. But on this side, because this side give this side and that side what they call it as a 501c3, and it is an organization that for the public benefit, talking about C3, then he got the deduction. But if he give too much, then from his fund and too much on our side, because that's 100%, he cannot deduct it one time. He had to wait for several years to say that, because you can't just one time and give a whole bunch of benefit and the government got nothing.
No.
What is the government, why the government don't receive taxes? I mean, why they give you a benefit? So
No.
they want to see something in return.
It all depends on the givers or the donators, AGI, right? You cannot,
Oh, wow.
up to a certain point. So, I mean, if he makes millions and millions of dollars, he could give the property away and still get the tax benefit.
Well, they always get the tax benefit, but the timing of deduction is based on your intention, okay?
Yeah, that was my question.
So I'm not going to go into the personal income tax because I'm related to our organization and only on our occasion. I'm not talking about a rich guy, okay? They got money to file tax return, a lot of good accountant government.
What you're talking about is just, we have to report it, that's all.
Yeah,
right?
that's all.
Yeah.
That's what I was trying to get at, is the percentage or the threshold for which the organization receiving the fund needs to make the reporting. Because if he only donate $1 million and you're collecting $100 million, he's a small potato. And
Well, it doesn't matter to an organization that receiving donation. The organization can receive anything, but 501c8 organization is has a different animal because it's not a public charity. It's only benefiting its member, right?
Yeah.
We're only benefiting our member, not public. We can do benefit public to that, but that's not our main purpose, right? As I said in the beginning, they require us to be a large system that we have to provide certain benefit to the member, and it's some insurance, some kind of death benefit, some sort. It's like a cemetery. They provide a part, reduced fund, and those. Then that's where it comes from.
Do we have let them know, do we have a death benefit?
I don't. I mean, it's up to you. You're the boss.
No.
I don't know all the membership. I'm only telling you what it is, and if you're asking me questions, I really can answer you on that. So at first, what we're talking about was going back was gambling, right? Bingo game, right? So that's called unrelated business income tax. So when you do substantial of those, then it's not in compliance with what we do for membership due. So you may have to do another form, okay? That is a series of all other forms that we have to do, but because I know we don't do any of those things, so
Of course not.
at this point in time, it's a moot question, but you can put it in mind. If you want to, go to find your accountant and talk with them, or go to IRS and download the information from the IRS portal, and you have all kinds of information available to you so that you will understand when you read it, understand some basic question, then you can go to your accountant and get those information. Because of this 1 hour, I don't think I can finish all those.
Comment and question. When you read the IRS It's hard to analyze, okay?
Well, then you want that money, you hire an accountant and a lawyer.
Hey,
Sometimes you're not even accounting getting
Suppose the lodge runs a restaurant business, okay? Somebody donates a restaurant to us, then we run the business, but all the proceeds are for the members' benefits, okay? Proceeds, the income. So we report it, but do you think we still have to pay taxes on it?
You do, one just call, that they call, what we call it?
But it's related, all the income.
No, it's not related, you're running a restaurant. You're not running a lodge.
So you're saying that we either sell the restaurant to someone else? get
I
the
didn't
money?
say anything what you would like to do, because I'm not telling you what to do, but what I'm telling you is called an unrelated business income tax. Okay, unrelated. You're running a restaurant, you're not running a lodge. So that's the distinction, right?
Sherman?
Yes, sir.
I gotta say it. Bob, again, you collect the restaurant income, and then you have income and expense. What we call the profit, it depends what you do with it. If the whole profit is then given to benefiting the members and giving charity to the community, you may not have to pay tax on it. You can actually be tax exempt because you're a 501c8. I really have to interrupt and say that's the way it is.
Oh, good.
You don't always have to pay tax, and it's not always because you run a business, unrelated business income.
But I think the business itself have to pay taxes.
It-
The income from
it-
after taxes,
It depends whether the relationship, if the business has already filed as a separate tax-paying thing, then the answer might be yes. But then again, we would not own it.
Right.
So we have to take a look at the situation.
we would not own.
Well, if you own the business, like you were asking, and if it happens the profit is used like I just said, benefit the members, welfare, benefit, educational event, like bring in the President of the United States to give us a talk or something like that, expenses there, then that's tax exempt. It can be tax exempt.
It can be.
It can be. And it
Well,
also
what I'm just saying is like a lot of organizations that in order to receive benefit, because you have, when you receive money, you have a bunch of money, you want to invest it so that you can, benefit the member, because you cannot just sit the money over there for doing nothing. Some organization may open a canteen, but that canteen has to be a separate business. When they receive the income, then it come out. If we operate the canteen, then we becoming running that business. It's not, within our organization. So we can open one up, put the money in there. That's investment. Okay, we invest in it.
that's
So
okay.
that is different, right? So that's a distinction. Because if you give a visit to San Francisco Lodge, San Francisco can operate it because we're not in the business of running restaurant, you see? So that's how it works,
So
okay?
you basically have to convert that to cash.
Well,
No,
we
no.
make an investment,
No.
right?
You
We
have
have
to-
to operate, you can make an investment.
Well, let's say you receive a house from somebody, and you can't operate it and rent it out or anything.
You can rent, you can receive rental income.
Well, that becomes a business.
Well, rental income is considered as an investment,
Yeah.
fixed asset investment.
Right, that's a fixed asset. But if you're talking about restaurant, you could have a separate restaurant business
Well,
with
restaurant
the
business,
income after
Yeah.
taxes to the members.
yeah.
So you receive a restaurant, what you gotta do is sell the restaurant,
No.
get the proceeds, and that becomes a donation, right?
Well, that can be done too, yeah.
Then you're not running a business.
Is somebody
Well,
gonna
then
donate?
if you sell it, then it become the proceed becoming part of the donation to
Right.
the organization,
Yeah, so
right?
you're not running a
Yeah.
business, okay.
Yeah. You don't touch it, you don't operate it,
Yeah.
right? Mhm. So in order to comply with the law, 50,000, then we need to keep some sort of record. If you becoming an organization, you have to keep certain record. It doesn't matter what you call them. You call them a lodge, you call them your own business, even your own finance. You need to keep permanent record. You buy a house, what can you do? You have your deed, that's your permanent record because you own that property, right? You buy a stock, you have a stock certificate. If you hold them, put it in a safe place because that is part of your record. And so same thing with our organization or any lodges. When we first start up, I think so this is not start up because we've been running our own lodges for some time. But we need to have some sort of record. It's like organizing document. When we first started it, we organized a chapter. We went down and asked you how to do, and then we're going to say you have to, in California, you probably go to Secretary of State and register as a non-profit exempt organization, and as a corporation normally, non-exempt, and then from then you create your bylaw and all those things, and then we come down and say we charter you, swear you in, right? All this thing, and then we tell you to apply for a nonprofit, for 501c under the national as a subchapter. Those are what we call permanent records, so you need to keep all those, okay? Put them in the safe place so that because we know you become a president, treasurer, whatever officer, you only there for some time, a period, and then you have to turn it over to somebody else. So the organization still exists, but if one person holds a record somewhere else, nobody knows, then there's no continuity, and when the IRS come and do an audit, where's you this document, that document, that document, it's, oh, I don't know. So then it's going to be a problem. Right? Or we have to search all over the place, and then you call, if I hold it, I do it, I get, I might be coming, don't know what we're talking about. I might not even recognize you. So he asked me for something, I don't know. It's Robbie is it, she is it, so that's the problem. So we need to do something and hold those permanently, including the application and then also the receiving the approval letter from the Internal Revenue Service. So if we don't have it somewhere, so I suggest when we go back, we find it and look for it now and make it as a part of the permanent record. That's what my suggestion would be. Yes, sir.
Yes. I have a question concerning the filing of the 990. Suppose one of our lodges in the nation didn't file at all. So what happens to the...
I will get to that later.
Okay.
Okay? Yeah. Yeah. We only have
Few minutes.
20 minutes?
15
minutes?
minutes.
No.
Yeah.
Okay, so I need to go
We
through
got 20 minutes.
because otherwise we're
15.
missing the good point, okay?
What?
So I'm talking about all the things. So it's like every year we file a tax return, what we call information return. After we do that, we need to keep a copy. So because that's why when in the meeting, every meeting, I say, you didn't do it, you didn't do it, you didn't do it. That's the reason I want to make sure that we had those records. Okay? So that is why every quarter when we are meeting, I said it, right?
Yeah.
So everybody said, Sherman, are you crazy? I listened to you 15 times already.
Yeah.
But that's it is. You did? Thank you.
Can you tell us how we can get the records?
For what?
The records that we're supposed to keep?
If you don't have them, then you have to go to IRS and request for documentation. You gotta pay a fee,
Yeah.
okay?
Small fee, small fee.
I don't know how much, you gotta go there and ask it, okay? Okay. So we need to keep all those supported documentation, okay? In order to run a business, we need to keep certain record too, don't we? Right? So just like my own business is housekeeper, you're doing it at home, you receive wages, right? You deposit in the bank, you need to know how much, because when you, at the end of the year, you know, your accountant, and they ask you how much you make this year, right? So that's one of the things, right?
Yeah.
So for organization, same thing, right? It's no different than individual person. An organization, no different from them. We do all the record. You know, when we live in USA, that is guilty. Then we have to continue keeping record for that. So we need 4 types of record. Okay, money coming in. Don't care what it is, right? We have rental income. We may have interest income, membership income, maybe some other donation, right? So we need to keep track. You can use a simple form, you can use a checkbook basis if it's smaller enough. Otherwise, you may want to purchase some sort of software or use spreadsheet. I use spreadsheet, Excel. So I set up as Excel worksheet, the date, the check number, the purpose, you know. Then the next column, probably who gave you the money, right? So you put them all there, those columns, and when you receive it, the money you deposit, they deposit $50 from due, right? And then another date, you know, we pay something, we have a meeting, we pay some meal, because when we do meeting, we want the member come. We don't want them to go, because normal time, night time, you know, after work, 5, 6 o'clock, people, and then we have a meeting at 7, people just rush into the meeting, and so we say, maybe we give them something to eat. Not extravagant, okay? No lobster and steak, okay?
Darn. How would they know?
Well, they don't know anything, but one day they want to know, and then that's all their beauty is, okay? And then we have to have something called money going out. So I keep 2 worksheets. One is money coming in, money going out, and set up like a checkbook type of business. Simple enough, because normally we're a small organization. The small largest, not like a national, keep a lot of record, right? We have some sort of record for asset, right? Asset means we have a chair, we have a desk, that type of thing. That's called asset, okay? So those type of things that we need to have to keep record and do that. So at the end of the year, we're going to summarize all those information. So the beauty is how much did we receive in income? 20,000, right? We got a lot of members. And then now you don't receive much from interest. In the old days, you probably receive 4 or 5% from the bank, but nowadays 0.1 or none at all, right? So the majority would be like, well, some generous person, when they have a Chinese New Year banquet, give you $100 instead of $20, right? You know, some people do that, right? So, but technically, we can give them a receipt, but the receipt must just say it's non-tax deductible because they cannot receive income tax benefit, so it doesn't mean anything to them. But so if it's 20,000, then we're in good business because we only have to file 990N, right? 990N, the simplest animal. Okay, all they need to know is an organization name, your EIN, whether you're still in business. Internal Revenue Service doesn't ask you how much. Or are you receiving less than 50,000? We say yes, and you hit the button. It's already filed. That is simple. That is some of the organization should be doing because some of them they say, oh, I don't know what to do. I mean, income tax, that is pretty scary type of thing, right?
Yeah.
I know that, right?
It
I
is.
mean, when we do our own income tax, it's a scary thing, right?
Yeah.
But I'm just telling you, it's nothing magic, just push the button, it's nothing to it, but you need to know what you're reporting, okay? Okay. I'm sorry I don't have something here to show, so I'm gonna go through the motion, okay? So
That's too bad.
if you have problem, then do it. That is becoming some problem, okay? Now, let's go back to the simplest thing that what we're gonna do. There is currently the Internal Revenue Service changing all their system all the time. They've been changing them every day. Now you have to set up a password.
Yeah.
Okay, you go to IRS, you look at it, you can type search 990N, it will direct you to the site that you're going to be providing you with a link to go to somewhere to register. And you register, and you can also get a password from them. Then you can file the tax return, okay? There's a handbook, you can follow it line by line, you won't miss it, and you can do that very, very easily, simply, and you can finish the job, okay? So when do we do that? Anyone know?
What?
Filing tax return.
Oh,
So it's always the 15th day of the 5th month, regardless of your fiscal year. Okay, so it's December 31st, it's May 15th, you know. If it's not, then it's not May 15th. Let's say 3 months later, then you add 3 months, August 15th, right? So that should be not a big deal, you know. So when you don't file, then you got a problem. Okay? If you don't file 3 years, then the IRS say, we revoke your exempt status. Now, then you have to go and pay income tax, right? For California, that's a bad deal, because California, if you are non-exempt, you have to pay $800 a year franchise tax. They don't call them income tax, okay? $800 a year, that's minimum, okay? We might not even receive $800 a year. So that we need to do and make sure that we do file. So if you don't file, then what happened after they say you revoked it? Then that is a big problem, right? We can, depending on circumstances, apply for reinstatement. So if after 15 months, today you receive a letter in saying that, bye-bye, then you wait to talk to your accountant and whatnot, what are you gonna do? So within the 15-day limit, 15, did I say 15? I can't even remember now. There's two types, 15 months, sorry, not 15 days. Within 1.5 years, or 1 year and three months, it's simplest one. But it's not really that simple, but you have to reapply technically, okay? You have to file, for us, we have to file Form 1024. So that is another application. You have to fill out all the information and you have to tell them that you are applying for reinstatement, okay? You have to give them the reason for. And there's a procedure going through all the line. It's pretty hard to read, okay? It's called Revenue Procedure 2014-11. So that is the guts of the law telling you what to do, okay? So what we need to do is file 1024, and then we don't need to refile tax return because they won't accept you. Because when we do like small organization normally, the large one obviously I don't think we will ever get revoked it yet. But we would have to make 1024. You have to have all your organization statement coming back again because that's what you need to put in again. So like your initial processing, okay? So that's important. But the beauty is you don't need to go back and do all your tax return that you're missing, and they won't give you a penalty if they approve it. Okay, they won't. They say, okay, I forgive you, forget it. Okay, I know you're a good person. Okay, but if it's not, you're after 15 months, that's another big problem coming in because you have to do all those tax returns that you missed. Okay, okay, because I've said 3 years, right? So minimum is 3 years, right? If you did 4 years, then you get to 4 years. And then they may assess your penalty. Depends whether they accept your explanation, okay? So you have to show reasonable cause why you didn't do it. They said, this member's supposed to do it, right? He's not there, and all of a sudden he throw all the paper away. He get mad on me because I'm the president here. He doesn't like me. So he throw everything. I mean, I'm just making up the story, okay? I don't think that's gonna happen. But that's how it is, okay? So, but if it's not 15 months, then we have to do all those things, and we have to do a lot of work before we can reinstate it. So that is the only problem that we're facing. You have to reapply and provide statement. And if they accept you, they accept you. They don't, they don't. And then you may have to file under different thing, okay? So I think that is what my conclusion is, to show you what you need to do, making sure that you don't go through the pitfall, going down, and go after the 15 months, then you have a more and more big trouble to doing the reinstatement for your organization. So presumably conclude my program for today. And if any more questions, if I cannot answer, I can go back and research it and send you an email. We'll work together to make sure that we can come back, us and organization together. We work together for a lot of things, and so we will continue to work. Whatever type of problem that we face them together. I think that's what we like to do. Okay? Thank you. I think. Just make it.